Right, I was muted. Thought I was talking then, but I was muted. Um, hey everybody, welcome to the stream this Thursday, the 12th of October. It's not going to be an incredibly long stream today. I'm just going to go through some of the data that's dropped. Obviously, the reaction to the CPI data. Dollar has gained that strength that we were kind of talking about in Tuesday's webinar or live stream. And yeah, so euro dollar's fallen, pound dollar's fallen. You know, anything to do with the US dollar at the minute is just tanking to the downside. Dollar yen has rallied. And yeah, we kind of expected a little bit of a jump here in today. Basically because I was expecting a little bit of a miss on the data. Now, good afternoon, Royston. Good to see you too, or hear from you. Hope you're doing well. Essentially, what we were expecting was a little bit of a miss here. I mean, it's not a miss in, you know, a drastic miss. Let me just move. Let me just change my view so you can actually see what we were talking about here. And let me just zoom in a little bit so you can see that a little bit better. Yeah, essentially we were looking for that sort of miss on the data. You can see here US dollar CPI, core CPI. Core CPI actually came in as forecast, spot 3%, as expected. So there wasn't anything kind of drastic there. CPI month on month missed. It still came in below the previous. So the market reaction is a little bit more aggressive than I expected. I thought that we would probably see, when we saw that sort of initial burst down on the market, I expected a little bit of a recovery, which we'll go through in a second, but it hasn't kind of come to fruition yet. Whether we will get that recovery is yet to be seen. Because in theory, that is, although it's kind of positive for the US dollar, it's sort of a negative in terms of it's probably not going to be the reason behind the Fed hiking any interest rates at the moment. So you've still got that kind of battle weighing up what the Fed are going to do next. CPI year on year increased to 3.7%. Obviously, that is a number where we may be seeing sort of a longer term view in terms of, you know, that could be a bit of a problem. I don't see that being too sort of drastic there. Obviously, I just did expect a little bit of a miss because of the core PPI that we had out and PPI, which also missed to the upside. So that's interesting. Unemployment claims also came down. So that is another, I guess, positive for the US dollar. That would be seen as fairly bullish rather than bearish. Expected to come in at 211k, just 2k above previous, and it didn't do that. It came in exactly the same. We have some more data coming up towards the end of the week. Got some FOMC members speaking, and we've also got the prelim consumer sentiment, which is forecast to come in a little bit lower. So there's still some data to come in the US that could obviously affect what's going on in the US dollar index or in the US dollar in general. So let's go take a look at what's happened. So we actually came in off a really nice level of resistance. This was Wednesday's high. Price came up into that level. We've rejected it. We started to push to the downside here. Today we've broken through some kilos. We are coming into another level of interest, which would be this level down through here. Just let me know if that sign in the middle is a little bit annoying. It annoys me a little bit. I wish I could put it like on the left hand side, but TradingView doesn't allow us to do that yet. But we are coming into a little bit of support. I could expect some kind of buying to come in here. Whether it be aggressive buying, I don't know. Whether we get back up to those highs, I don't think so. Maybe just a move back up into these sort of levels before a continuation is what I'm kind of expecting here. Because if we just go take a look at the US dollar index, you can see that we've found that sort of bottom now, around about that 105.50 is where we were expecting some dollar bulls to come back into the market. Basically, I was still bullish dollar until we close below that level, right? Because that is still technically an upward trend. We're still technically making higher highs and higher lows within the range. Until we closed below that low, that's when I would have changed my mindset. I think if we had this data drop and it missed to the low side and we saw a break and close below through there, I would have been, you know, having to change my sort of bias on the US dollar at the moment. For now, my bias remains intact up until 107, okay, because I want to see how price reacts around this 107 level. If we get into 107, then we may get sort of a bit of a move to the downside, or price may break and head towards the 108, which is something that we've been expecting for a little while. So yeah, dollar performing well at this current moment in time. We'll see if there's a potential for it to reach 107. Obviously, like I said, important data coming up. 108 is the sort of level I expect price to come into. I mean, if we look at it from a monthly point of view, we traded outside this yearly range, closed above. If we had a secondary close strong, then the dollar could finish the year quite strong, I think. Again, this is going to be data dependent and depending on what the Fed potentially do in November. Let's go have a quick look at our 10-year yields. We were looking at the potential for the 10-year bond yields to bottom out as well, around about this 4.5%. It's coming a little bit higher than that, around about the 4.55%. We're starting to see a little bit of a bottom to that. If bond yields can trade above 4.6, I think that will then lead us back to the 4.8. Really speaking, my target level are these 5% bond yields, to be honest. That's something that seems to be cropping up a lot lately. And, you know, that 5% to the 5.12, I think is a reasonable sort of target for bond yields. And we haven't seen those highs since 2007, though. So that's something to consider. If I go on a weekly chart and just span this out, the last time we reached these highs were back in 2007. So that would be a little bit of a sort of, I guess, warning in a way, a bit of a recession warning maybe, if we ever got to that sort of higher 5% or above 5%. That'd mean we'd have a really seriously strong US dollar though, and at that point we'd probably be at the 108s, maybe even above 108 on the dollar at that point. But yeah, bullishness coming back in at the moment. Whether that sustains, we've got to have to wait and see. I quite like the idea that we've now we're breaking through these trend lines now, was just to kind of draw a loose trend line through there. But, you know, I would expect these type of highs to start to get sort of targeted on the way up. So we may get sort of a bit of a pullback, continuation moves maybe up to that sort of 107. So that's what I'm kind of expecting here on the US dollar at the moment. So we will wait and see. Who else we got in then? So we got Vincent in. Good afternoon. Good to hear from you again. I hope you're doing well. I hope you're doing well. I am good, thank you. I can't do a really long stream today, unfortunately. I've got a little bit of stuff to catch up on in the background, so I can't stick around for too long, but I will just jump through a few charts of interest that I'm taking a look at the moment and then go from there. So euro dollar is an interesting market. We came up into this sort of consolidation zone. This was that, if you remember yesterday's video, I talked about the sort of market profile, volume profile on a monthly scale. This was a big monthly level in and around this area here. And oh, there we go, there's the alert. So I did expect some kind of reaction to that point. We had a really big sort of sell-off coming into here. That was largely driven by that news that came out. We had a little bit of early selling off in the European session, and then it kind of followed through into this US session. So Lots of downside here. Again, I'll kind of look at these and think, well, don't really want to jump on anything here because of risk reward ratios. If I was to try on a short here, you don't really want to do that because you're coming into a low. So that wouldn't really be a sensible thing to do. If price can pull back a little bit, maybe towards 1.06, form a bit of a lower high, maybe, that could be something we look at going forward. But the signs are there that the dollar strength's coming back in. That's the important thing. And if I was looking at this, I'd say to myself, where would I expect price to come into? Perhaps take these lows, perhaps come back down into that 1.05 level as well. So euro dollar looking good. Nice sort of bearish engulfing candle there. I would expect some kind of retracement, to be honest, to that move before seeing anything else. So that's what I'm kind of looking for here. Let's go take a look at cable. Cable's an interesting market because we do have, we had GDP data out of the UK today, actually rose from minus 0.6% up to 0.2%. So that was a sort of positive for the pound. The reaction from the pound hasn't been good. We've seen a little bit of a drop to the downside pretty much all day, to be honest. There's been that sort of reaction. We had the news drop. We tried to trade into these hourly highs here. Price failed to trade through those highs. And ever since we've been bearish, we're now breaking that 1.2250. So I was interested in potentially, looking at bullish ideas on pound going into this week. From a forecast point of view, when you look at the news, the predictions were, or the forecasts were coming in a little bit lower. So I was expecting maybe that we would see that dollar weakness to come. It just didn't, with the sort of NFP reports really kind of threw me off that. And, now that we've got that dollar strength in prices coming in. But if this finished as like a bullish pin candle, rejection of this 1.2250, we may have to say, okay, price may want to come back up before sort of breaking through. A close below 1.2250 would be good for some downside on cable. It kind of brings me back to when we were looking at the previous month's data, especially on the likes of euro. But we were looking at last month's close, really strong bearish close. Was looking to see if that momentum would follow through. We also had the stochastics on, and we were kind of looking at when sort of the stochastic crossed over in the past and sort of how price was affected by that. And just because a stochastic crosses over does not mean price is going to move to the downside at all. I just like to add some confluences in when I'm doing my analysis and just having a little look to see, wow, that may happen. I can see here, obviously we went to the downside here. We traveled to the downside back into this support. Here wasn't very good. Price stuck around for a couple of months, but then reversed and went higher. On this occasion, it was very good because you had that sort of turning point there while price was at a major resistance level. And yet we saw that turn over. The difference this time is we kind of tried to break into the sort of 1.3s, couldn't do it, and then we're getting that turnover. So is that going to be a sign that we're going to try and maybe revisit the 1.1 handle, So I think definitely there could be something on the cards there for a little bit of a move down towards that point. If the conditions for the dollar remain pretty bullish, which I've got a good expectation that they will. So yeah, that's a little bit of interesting sort of analysis there, I guess. We've got these monthly lows coming in around the 1.2s as well. So just going back to that daily chart, a move back down into these lows isn't really too much out of the question. I'll probably look for some kind of, again, I'd need some kind of pullback into this. But you've got, obviously, trend support at the moment at 122.50. But any kind of pullback higher, maybe even sort of 122.80s, 122.75s, could provide us with a little bit of something to work with. I want to get really sort of critical, maybe back up towards the area we sort of sold off from. would be a nice little bit of an area to see price come back into. So I'll keep an eye on cable, to be honest. Now that we're trading back below 123, 122.50 as well, could lead to a bit of downside there. Let's just have a quick look at a monthly volume profile. So I want to go from the end of September to the start of September. So we've kind of come into this little bit of a pocket. So that edge of ledge there, really very similar to what we were looking at on euro dollar. Yeah, a little bit of an edge there, and price has started to sell off. We've got high volume levels around about 124, 125. So yeah, I was initially interested in that sort of break of this high with the potential for 124 to come in. But seeing today's bearish move, it's making me think that dollar strength has come back a little bit. Very similar to euro, you can see the monthly volume profile. You've got the value area low, lots of volume there. Prices come back into that, and this is what we were kind of talking about in yesterday's video. So yeah, euro dollar doing well. Let's go take a look at dollar yen. Dollar yen's going to be another interesting talking point because it looks like we're coming back into 150. 150, I think, is going to be another sort of potential level where we get another bit of volatility coming in. I'm going to actually set an alert there at 150. It looks like it's going to happen. Whether we see the volatility like we saw here in the market, maybe we won't. We might trade through, hit 151, maybe 152. But I think a lot of people will be looking to see what happens here. Obviously, we know that traders got short at this point because we dropped very quickly from the 150 down towards the 148 very, very quickly. So I feel that sellers may try and protect that 150 level at the moment. So that's something to also watch out for. It's quite nice actually seeing this monthly. Let me just take that watermark off. It's getting in the way for me a little bit. It's actually nice to see the reaction here from the point of control. So obviously high volume levels through here. Price reacted at 150. Where does it come and retest? It comes and retest those high volume levels, and then it starts to react from that and start pushing back to the upside. So yeah, that's an interesting thing to look into, is your sort of volume profile levels, because price can react from them quite aggressively. So that was around about 147.72 to 147.50. So there's potential for that to reach 150 essentially here. Royston question: if the dollar continues to rise against the yen, do you think the BOJ may step in? Yeah, I do. There was obviously the reason why I think they'll step in is because we actually saw all this volatility at 150. I think if we weren't going to see them step in, we wouldn't have seen sort of that much, that big of an impact at that point. So I think higher prices, I do think the BOJ will step in again. It's just whether it happens there or whether we get a little bit more of higher prices, because if we look at what happened last time, I always like to kind of look at history. History doesn't always repeat itself, but sometimes it can kind of give us an idea of what may happen. We had that sort of what we call that was the sort of first intervention rumor from the BOJ previously. Price then rallied higher, much higher than that, and then it came into that 150, and we had the sort of confirmed intervention where price then traded lower. So just because they've intervened at 150 doesn't mean that they're going to intervene at 150 again. But I think it's just wise to keep our sort of wits about us at that point. Let's just kind of measure the percentage from that high. So it still rallied another 4.2%. So about 600 pips above that. And if we just kind of take, it's a bit of a loose theory, but if we take that kind of theory in again around 600 pips or so, you're looking potentially to be around about 156. That's just very loosely. I mean, there's nothing really to base that off. If I look left, where's 156 bringing us? You got this high back in 1990. It was 159.50, and then you got 164. So, don't think we're going to reach those type of levels, to be honest. 156 would be a max. I wonder if we get any kind of fib confluence. I'm not a huge fib trader, but you know, I used to trade. I used to look into extensions quite a lot, especially the 161 and 127 levels. So in that sort of upward trend there, you can see sort of impulse, retracement phase, or sort of secondary phase, primary phase. We have come into around about that 127 extension at that 150 point. If we were to break through, then maybe the 161.8, around about 154.67 maybe an area to look at. You know, maybe fib traders are looking to see that kind of move happen, you know. So yeah, we may blast through that point. We'll have to wait and see. I'm going to just keep an alert there at 150. If we do reach it, then we reach it. If we don't, then, you know, or if we break through it, then we'll have a little look at some other levels of interest. But yeah, look at that reaction from there before. I can see a similar thing happening again potentially there. So yeah, dollar yen will be one to watch. I'll definitely keep that on the watch list. Dollar Swiss, not really bothered by. Let's go take a quick look at oil. Oil rebounding again from around about the 83 level. We had a really nice reaction on Monday. Really strong reaction. Went from sort of the 82s up to the 87s. We've come back down. We're retesting that now. So interesting to see sort of. I think I had a comment earlier, actually. Someone said it's really interesting to see oil prices fall, rally, and gold prices fall. So I haven't quite seen that. Obviously, gold has been fairly bullish. We were talking about this breakout here and looking to see maybe price coming into the 1875 level. I was looking for a pullback on this, to be honest, back into this consolidation. We haven't had it. Price just kept moving higher, but we're now in those kind of target zones on gold, and it's just funny how the market works sometimes. You know, we've come into these levels of resistance just as the dollar comes into that 105.50 and, you know, starts to have a sort of bullish reaction. So potential for gold here is to come all the way back down to 18.15 if, you know, if the US dollar continues to strengthen at that point. So, morning, Rygo. Hope you're well. So, yeah, gold will be a very interesting one. I think if you get a bearish close on gold today on the daily chart, then, you know, you could be looking tomorrow at some kind of retracement, move. Just seeing a very heavy bearish reaction here from gold. I mean, there would definitely be some support coming in here. If I just grab a volume profile tool, around 1871, there could be a bit of a reaction. Lots of heavy buying there. So ideally what you'd probably see is a reaction here and a breach of it, a breach of the downside. Tell us that those buyers aren't active there anymore. And then we'll see potentially a breakout. So maybe watch this trend line here as well. Breach of the trend line will probably come and target these lows through there. So looking good for gold as well. Let's flick quickly over to the stock markets, see how the stock markets are doing. Looking for the S&P to come back a little bit. Oh, this isn't the S&P I use, is it? This one. So, yeah, I was looking for the S&P 500 to come down more towards the 4122, maybe this 4200 area. It's this kind of nice consolidation on the weekly. We didn't quite get there. We came very close. Actually, we did breach the 42 by the looks of it. Let's see what that candlestick low is. The low is 41.98, so we did breach the 4200. It's just a little bit aggressive with my sort of zone to kind of jump out at me or point out. If I'd used the tips of wicks, there probably would have been a nice sort of area to look at down through here. But yeah, this could affect the stock markets a little bit. You know, if we do see that, obviously, that continuation of US dollar strength and obviously higher CPI numbers, then, you know, if the Fed are then more likely to move on rates, then that could affect the stock market again because, you know, higher borrowing costs for businesses, for banks, things like that. Make it a little bit more difficult. So S&P 500 could break down a little bit here. Let's have a quick look at the Dow. Yeah. There's got to be a big volume level through there, I reckon. I don't know if it will show up on this chart. Oh, I expect it to be bigger volumes there. Massive volume down at 3,300. So that'll be a good level to see the Dow come and retest. Bitcoin pretty much staying the same. Let's have a little look at the VIX. I haven't looked at the VIX for a couple of days. A little bit of a pullback in the VIX. Obviously, if we see the volatility index rise, you've got more of a risk-off tone. You're going to have yen strength and whatnot. So to see that fall and see sort of dollar yen heading to 150 again doesn't really surprise me at this current moment in time. You know, maybe we'll get some kind of interest around 16. Still quite like this 14 area. You know, maybe a bit of a range on the VIX at the moment. All right, guys. Any questions, guys? I know as a little bit of a sort of short run through. Like I said, I can't spend too long on here today. It's coming up to half an hour. Probably will leave it around about that half an hour mark. Any charts that you want me to take a quick look at before I sort of head off? If not, I will leave it there. Right, guy, what do you think of pound Oz to the upside? Let's have a quick look at pound Aussie. It's looking pretty good. Obviously, had that 192 to contend with, and we're also kind of coming into a little bit of a trend line resistance. But I like the sort of break here on these highs. You know, you've almost got that structure play of sort of higher highs, high and lows. It's not really an aggressive sort of thing going on there. Let's have a little look at it from a weekly. Yeah, weekly seems to have found support at 1.9. We might get a little run up into the 195. Kind of got that sort of pause in that weekly break, haven't you? So maybe a run up into that 195. I'd be watching this 4-hour time frame, really. I mean, look at that consolidation break at the minute. Probably see something like that. Move up to 195. Got this sort of consolidation through there as well, so there's probably a lot of volume through here. Yeah, around about 194.52. Probably building some decent volume there as well. $191.37. Yeah, I mean, I don't hate this long, to be honest. Just highlight that sort of consolidation through there. What I would say, though, we are coming into that area of resistance, being that trend line resistance through there. We might get a little bit of a reaction at that point, but a breakout of 192 I would think is a bit more bullish, with 195 potentially. Royston, you covered the headlines for me. Thanks, John. No worries. Thanks, Royston, for joining me. Cheers, Guy. Right, I'm going to leave it there. Thanks, guys. Thanks, Guy. Yep, don't forget to leave a like on the video. Really appreciate it. I will catch you in the next one. And yeah, have a great weekend, guys. Cheers.